Closing costs can be overwhelming for home buyers, especially first-time buyers that are not still used to the system. You might have gotten that $20,000 all saved up for handle the down payment, but you could be charged $7,500 in closing costs, which almost cuts your savings in half. Closing cost assistance allows you to cover your down payment and closing costs with less worry, so you won't have to spend all your savings covering the fees. There are many programs that offer grants and loans in local, state, and federal levels that will help you with your closing cost. This could be up to thousands of dollars, which you might not have to repay as long as you meet certain requirements. How closing cost assistance works. In most cases, you won't find a program that allows you to cover the closing costs alone. These programs are usually part of a down payment assistance (DPA) program. DPA programs allow you to close either your down payment or closing costs, whichever one would help you complete your home purchase. The aid could come in the form of a grant, money that will not be repaid. Forgivable loan. This aid is offered in the form of a loan that won't have to be repaid if you stay in the house for a number of years without reselling, refinancing, or renting out the home. No or low interest loan. Repaid together with your primary mortgage. Who qualifies for closing cost assistance? Closing cost assistance programs don't come with strict requirement depending on who's offering the aid. Grant programs offered by states and local housing commissions might not be available in certain counties among the following requirements. Income limits. Grant programs are limited to individuals that do not make more than the area's median income, AMI. The limit on household income is based on the household size. Minimum credit score requirements. You must have a minimum credit score of 620 to qualify, though it could be up to 640 in certain areas. Property requirements. The property must not exceed the purchase price limits and must be a single-family home to be used as your primary residence. Loan type. Some organizations offer mortgage loan programs that allow you to apply for down payment and closing cost assistance. Other assistance programs can work with almost any loan type, including FHA loans and VA loans. Homebuyer status. DPA programs could be restricted to first-time home buyers only, while others could include both repeat and first-time purchasers. Other ways to reduce closing costs. While local programs and housing finance agencies would offer you just about the right amount to cover your closing costs, this assistance doesn't always have to come from these sources. You could try out these following ways to cover your closing costs before going for these programs. Cash gift from a loved one. Rather than searching for a program to help you with your closing cost, you can ask for help from your family members, relative, or friend. Take note that some home buying programs will not allow you to use gifted funds for down payment and closing costs. However, major home buying programs like FHA loans and some conventional loans would allow you to finalize your mortgage this way. Your mortgage lender would accept the gift funds if only they are properly documented, so you should ensure that this is done. Ask the seller to pay closing costs. If you think this sounds absurd, it is a common practice for the home seller to pay for a part or all of the buyer's closing costs. This is done by working the request into your buying offer. You can request that the seller cover some of the closing costs to allow you keep more cash on hand for additional expenses that arise with moving into a new home. This can be done by your real estate agent. This should only be done when necessary, as the offer could turn off the seller. Apply for lender credit. Lender credit involves the lender rolling your closing costs into the loan by paying a higher interest rate. This might sound smart since you would be paying less money upfront. However, it would cost you more in the long run. You will end up paying more money that you would have if you had cleared out the closing costs separately. Where to get closing cost assistance? Closing cost assistance is offered alongside down payment assistance programs in all 50 states of the US and its islands. However, not all states offer an official DPA program. You might find only local DPA programs, which could be restricted to counties and come with high credit score requirements. To begin your search for closing cost assistance, you can go to Google and search for programs in your area. You could also ask your real estate agent to help you find some programs and work you through the process of getting closing cost assistance. Thing you should know before seeking closing cost assistance. While closing cost assistance might sound like an easy way out of paying extra for your mortgage, it is not without cons. These are some of the things you should have in the back of your mind when seeking for closing cost assistance. Home buying eligibility. Closing cost assistance may only be possible if you're purchasing a home that meets the requirements of the program. This means you could be restricted with the options available. Type of home. Take note that going for closing cost assistance might restrict you to a certain type of home. It could be a single-family home that must be your primary residence. Second mortgage. Down payment assistance programs won't always offer grants, but they could come in the form of second mortgage, which means you would have to pay more in the long term for the mortgage.